Hey everyone, I'm not going to make you wait until the end of the video to reveal what my top stock to buy is in July. It's Alphabet. Alphabet is my top stock to buy. But you're going to get more in this video than just the name of a stock to buy. I'm going to explain my reasoning behind why I've rated Alphabet as my top stock to buy. And I'll explain several factors to justify my reasoning behind that. And I think that's more critical than just getting a name of a stock to buy, because that will give you more conviction, more confidence in the company. And therefore, when the stock price fluctuates up and down, you'll know the factors to look at to determine if those ups and downs are a reason to buy and sell or to just continue holding that stock. So the reasoning behind an investment is arguably just as important as choosing the investment. So without further ado, let me explain why I like Alphabet as my top stock to buy right now in July of 2024. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Alphabet has been my top rated stock to buy all year long. I made this recommendation at, I want to say December 30th, December 31st, and placed Alphabet on my list and put it on the top of my list of top stocks and ranked it as the top stock. So far this year, Alphabet has outperformed the market significantly. It's returned 30.54% or 30.27% if you consider the two different shares, the GOOG or the GOOGL. I'll let you know in a little bit which one I prefer and why that's the case. Then you compare that to the S&P 500 index, it's only returned 15.23%. So that's a good year for the S&P 500 index, but it's already done that in the first half of the year. But Alphabet has doubled that return. If you compare my top stock with the equal weight index, it's returned 4.96%, while Alphabet is nearly 6 times that. So my top stock has significantly outperformed the index, and I think it will continue to outperform the index. One of the reasons I think that's the case is because the valuation remains attractive. Alphabet is trading at a forward price to earnings of 21.61 for the GOOG shares and 21.44 for the GOOGL shares. Now, I prefer the lower priced shares here, the GOOGL at 21.44. The only difference between these two, or the main difference between these two, is voting rights. And that's not really important for shareholders like yourself and myself, because we don't have enough shares to exercise any influence on the company. Those voting rights are almost meaningless for us, whether or not we vote for one board of directors member with our 5, 10, or 100 or 200 or 1,000 shares. It's not going to make a difference. It's not going to make a dent in the company's decision-making, in the company's structure. So that's why whenever this situation occurs where companies have 2 different or 3 different classes of stock, I prefer the lower priced ones. Sometimes even the ones with the voting rights are the ones that are higher priced than the other. I just prefer to take the lower priced. I don't want to pay a premium for the voting rights. And if the shares with the voting rights come at a lower price, then I'll take those either way. I'll take the lower priced shares because voting rights, not important for me. I'm not a wealthy enough investor to have enough shares to exercise influence. Now, if I was, then that would be important for me. I would consider that as valuable to be able to exercise influence on a company's board of directors. Now, another reason why I've recommended Alphabet stock is the company's excellent and lucrative business model. You can see in the last decade, Alphabet's revenue has grown to $318 billion, up from around $80 billion in 2015, so revenue growth of nearly 4x in 10 years. Additionally, that revenue growth has led to booming profitability. Operating income has jumped all the way to $92 billion. $92 billion in operating profit in one 12-month period for Alphabet. That's how lucrative the business model is. Remember what Alphabet does, right? It's primarily a search engine business. That's where it gets the bulk of its revenue and profit. And then it also has the cloud segment. It has YouTube. It has the Google Suite. It generates revenue from several different sources, but primarily from the search engine business and primarily from free services that it generates ad revenue from. It's been a lucrative business model because of the large scale. Billions and billions of people are using Alphabet's services and products, and that creates desire from advertisers that want access to those individuals. They want to influence those individuals' purchasing decisions. So they're willing to pay Alphabet for the right to show advertisements to those billions of people that are using Alphabet's products daily, weekly, and monthly. And one of the primary concerns with Alphabet stock, and the reason why the stock has traded at a cheaper valuation for some time now, is the worry that ChatGPT and other large language models are going to take market share away from Alphabet's dominance in search engine. Let me share with you that concern. Alphabet has absolutely dominated the market share of search engine worldwide. Here I have a chart from Statista that's showing you the search engine market share worldwide from January 15 to January 2024. And you can see here in the blue, that's Google, and everyone else is down here way, way below Google. And in 2015, Google had 91% market share worldwide, and Bing from Microsoft was second place or third place at 2.76%. Yahoo was second place with 2.84%. So let's fast forward to January of 2024. Google has 91.47% market share. Bing has jumped Yahoo with 3.43% market share, and Yahoo is down to 1.1%. Still, Alphabet, Google, dominating the search engine market worldwide. Now, ChatGPT is a different category, so I don't know if that's incorporated in this market where when you're searching on ChatGPT, is it included in search engine? Maybe, maybe not. There are some distinctions to be made here. But what's important is Google still dominates that search engine market, 91.47%. So you haven't seen a meaningful dent in its search engine market share. And that's also true when you look at the company's revenue and profits. You don't see a negative impact in its performance. So that concern is still relevant. There's still a chance that ChatGPT and other large language models put a bigger dent in Google's market share, but we haven't seen that yet. And remember, Google has its own large language model that people can use as well. So it's not as if Google is not fighting back and Alphabet is not fighting back developing its own product. Now, looking more broadly at the digital advertising spending market, according to Statista, this market is going to expand significantly. So in 2022, $549 billion was spent in digital advertising in 2022. In 2023, it begins estimates. These are not official numbers just yet. It hasn't all been accounted for, and so it's still considered an estimate. But from 2022 until 2027, spending is expected to grow by more than $320 billion, from $549 billion to $870 billion. And Alphabet is the largest digital advertising business in the world. It stands to benefit from this growth in digital advertising. We've already seen that Alphabet's business model is very lucrative and profitable. I've shown you the growth in revenue and profitability, and it's operating in a market that's absolutely massive, $870 billion spending expected by 2027, and that's likely to grow to infinity. Advertising spending, I think, will continue to grow to infinity. It's going to grow along the lines with productivity growth worldwide, increasing population worldwide, increasing gross domestic product worldwide. As economies grow, advertising grows. You need advertising if you want people to spend on your products. Many of the products that are sold in the world today are not really needed. They're supported by advertising. It's advertising that makes you want to buy a new car when your older car will survive another 5, 6, 7 years, but still some people go and trade in their 3-year-old car for a newer car. Why? Because advertising. It makes the car look attractive, it makes people want to buy it, and so they upgrade. That's why advertising is going to be around and growing along with the economy to eternity, in my opinion. Now, that doesn't mean it's going to grow every single year. There's going to be down years, but over the longer run, advertising will grow along with the economy. So all of these reasons are why I've placed Alphabet as my top stock to buy in 2024, right now in July. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.